Shocking update from Apple. We need to talk about some housing market updates that you won't believe. And finally, what is going on with U.S. home builders? Lots of stuff to get into. Today is the daily financial news for the 17th. Let's get into the housing market. The housing market, thanks to Altos Research and Logan from Housing Wire. It looks like, folks, the spring selling season has not bottomed yet. Inventory is down again. Inventory is down 1.3% week on week. Yes, inventory is crashing. Not a surprise if you follow this channel. I have been on this trend for quite a while. Supply is falling. Active listings now at 405,000. Just last week, they were 411,000. They fell 5,383. There is no bottom yet. If you want to know what the active listings were for the week on week compared to past years, just last week we listed 49,000 new homes. These are round numbers. Last year, 67,500. And the year before, which would have been 2021, about 67,000. So again, new listings down between 20 and 32%. These are striking numbers and are highlighting what you and I have been talking about for quite a while. The move-up buyer is not moving. And I unfortunately think this goes another year. I know there's a lot of people talking about the spring selling season just being delayed and delayed. I believe that is wishful thinking. It is not coming. Again, and also we've learned something. I just recorded the daily financial news for Friday and Saturday. They will come out at 8:30 and 9:30 today. One thing you will hear is from John Burns Real Estate Consulting. John Burns Real Estate Consulting did a survey, and they found that 71% of home buyers want 5.5% mortgage rates. That should not be a surprise to you. You and I have talked about the worst interest rate for the housing market we have. Again, we all want a different housing market, but we only have what we have. 5.5% mortgage rate today would destroy housing. And what do I mean by destroy? It would unlock a wave of demand with no supply. And then frankly, the home builders are going to clean up. Even though there are some people talking about home builders going bust, it's not happening. So again, housing market. Lots of stuff going on in the housing market. Next up, let's talk about RedFin. RedFin, new listings down 25%. Again, this is a weekly number. It is the 8th straight month of double-digit declines. We've been talking about this for a while. We called it very early. It is still going on. Double-digit decline. Bidding wars are back. Yes, folks, bidding wars are back. Thank you, buddy. Thank you, Evo. I appreciate you. That's very, very nice of you. Also, this is according to Black Knight. 85% of homeowners have interest rates below 6%. That is wild. Prices year on year. This is according to Redfin. Okay, folks, here's your housing crash. The housing crash is here according to Redfin. Year on year, we are down 2.3%. That is national median home price. The national median home price is $364 grand. This is the sad part. You got your 2% decline. I'm sorry, your 2.3% decline. Unfortunately, if you waited for that decline, your payment is up 11%. Folks, on this channel, we talk about 3 variables. It is price, it is interest rate, and income. That is what makes up affordability. I know there are people out there showing you pretty charts that say average price, average income, broken. That's not how it works. You must layer in interest rates as well. We are in a payment society. The only way average price, average income makes sense, the only way, is if you and I paid cash for housing. And hopefully you know most of us do not pay cash for housing. So it's a chart that looks pretty, that is complete and utter nonsense. So always pay attention to what you are looking at. I don't know if you saw this. I put it on here in green because I just saw this. I will be looking for articles on this later. So if you find one, leave a link in the description below. If YouTube sometimes deletes links, message me on Instagram. Looks like Apple, yes, Apple, that company, just announced a savings account that's going to pay 4.15%. I know no details. It came across my phone. I was like, wow, that's shocking. That's different. So yes, it looks like Apple is launching a savings account, 4.15%. That's going to be, that could change the game. That could force big banks to react. Again, I know nothing. I will be digging into this later. If you find an article, let me know. But yeah, 4% interest and an Apple savings account. Interesting, huh? That was not on my bingo card. I did not have that on my bingo card. That is a complete and utter shock. We'll see where that goes. Regional banks. We heard on Friday from the big banks, beat top line, beat bottom line, record net interest margin, all this stuff that you and I talked about. Well, now we get to see about the next tier. And thus far, not so great. Not so great. Yep, M&T Bank beat top and beat bottom line. State Street beat revenue but missed bottom line. Again, they're talking about deposits leaving, fall in fee income. You know, they talked about assets falling 10% in a quarter. That's a lot of money leaving the regional banks. So again, I expect regional banks to be a very mixed bag. Some of them will be highlighting, frankly, cause for concern. Others will be showing, we're doing okay. But again, regional banks, I think, will be very spotty, where the big banks, you know, again, the top 5, the top 6, the top 7, they got all the money, net interest margin. Again, net interest margin, they do that for doing nothing. JP Morgan, this is from last week. I think they talked about a 50% increase. All they do is they take your deposits and they take them to the Fed for an overnight rate, and they made $20 billion. I mean, man, how many people do you need to do that? That's crazy. Charles Schwab reported this morning. Charles Schwab, looks like they missed on revenue, but they beat on the bottom line, which is earnings. They did pause their stock buyback, which I thought was interesting. That is a prudent measure by executives, so they stopped that. Looks like they had a rise in assets of 150 billion and 1 million new accounts at Charles Schwab. So don't know good or bad, but again, that's what was reported this morning. Looks like there's some acquisitions. I expect acquisitions to go up big time. It looks like Merck is buying Prometheus Bioscience for $11 billion. Yes, folks, $11 billion. They actually paid a 75% premium. Damn, 75% premium. That is crazy. Looks like Sega is buying Angry Birds, the maker of Angry Birds, which is Ravio. And they're buying it for a 19% premium. 19% more in line what I see. Merck paid 75%. Wow, that's a heck of a premium, isn't it? I saw an interesting San Francisco stat. I want to give a shout out to Mike Simonson. He's at Altos Research. He put this out. You're talking about San Francisco office being 25-30% vacant, right? You and I have seen those stats. In fact, I think I've shared them with you. But did you know the cell phone activity? The cell phone activity in San Francisco is down 69%. 69. San Francisco is dying. That is what that means to me. It is. I think the cell phone statistic is a far greater indication of what's going on in the city versus office. It's kind of a misleading number, but wow, 69%. Pretty crazy. Home builders. Looks like home builders were reporting. We get a lot of housing data this week, folks. Home builders are, in a sense, crushing it. You and I have talked about home builders for the last 4 years on this channel. Historically speaking, they make up 10% of the market. Some years, 11, right? 10 or 11. Right now, in this market of declining inventory, they are making up 28, 29, 30% of the market. Home builders are crushing it. They slowed down building. They're controlling costs. Commodities are coming down. They have the financial flexibility to do rate buy downs. Home builders are crushing it. If people were telling you these folks are going out of business, stop watching them. It's just not how, it's just, they don't understand simple economics. Pretty crazy. Then, folks, I don't know if you saw it, but we did the Legends of Real Estate Investing yesterday with Casey, April, Alicia, and Anna. And all I got to say is you missed it. This format of bringing experts and millionaires from my Rolodex to you is working out better than I expected. Completely audience-driven, questions via chat, and directly you get to speak to these amazing investors. Here is 4 stories that you missed. 1, Casey and her husband lived in Southern California. They could not make it work. What did they do? They had a conversation. They moved to Memphis so Casey could stay home while her husband worked. They knew no one. This is not like they moved in with family or something. They went to a market where they knew no one. And then, of course, Casey, as she shares with us weekly, started a craft business so she could build her deposit, down payment and buy her first rental. Also, she shared with the group yesterday, she just got her first off-market deal. Go to April. April Crosley, Lazy Girl REI. If you don't know her story, she was a teenage mom, 16 years old on welfare. And she was able to put herself through college, get into the healthcare industry, get out of the healthcare industry, and go on to do amazing things. She is she raises private capital and all of these amazing things. You missed out. Then Alicia. Alicia bought a flip at 18 years old that took 2 years to get done and ultimately almost made $100,000. 18 years old. I was not buying real estate at 18 years old. She told us that story. She told us how she transitioned from being somebody who does flips into mid and short-term rentals. She talked about all the apps and automation and all the amazing things. And then, of course, we closed out with Anna. Somebody's been on this channel for 4 or 5 years. She talked about her best financial decision being selling the big house in Texas, buying the fourplex in Pennsylvania. She talked about one rental at a time. Then she talked about why she got a beachfront Airbnb, why she's doing bigger and better things. Folks, you missed out. I bring this up because, again, I'm giving you the opportunity next Sunday to once again talk to people in my Rolodex. You're going to get to talk to a top 1% agent and ask them, how do I get attention of agents? What questions should I ask? Agents, you are going to figure out how you should become a hybrid agent. If you ever wanted to get out of a W-2, a day job, and into real estate, you're going to get that chance. So you're going to get the chance to talk to Beth Traverso, a top 1% agent, somebody who hacked as she was serving drinks. You'll talk to Jason Pritchard, who left a corporate job, burned the boat, is in my second book, 15 Conversations with Real Estate Millionaires. You're also going to get to talk to TYLG, who's been doing this for 30 years, and talk about creative financing and what might be right around the corner. Folks, it is $47. It is from 8 a.m. to 11 a.m. this Sunday, the 23rd. I'll put a link below. Again, if you buy a ticket, you will also get the video so you can rewatch it, or if you miss some of it, you will get it. I think it is only fair. Again, you missed yesterday. It was better than I expected. I mean, it was fun. It was fun. All right, everybody, take care of yourself. Have an amazing day. Bye.